Hi folks, Ira Epstein, and I'm having lots of internet problems on this Wednesday night, September 13, 2023. It's not my computers. The internet coming into the house in my whole area, Xfinity's having a major nightmare with. So I'm having to shoot this on my hotspot. It doesn't handle a lot of data like we're doing real well. So please put up with it. I'll go faster than normal. CPI numbers came in a little higher. The market doesn't care. The market has just made up its mind the Fed's going to do nothing. I don't know what the Fed's going to say to that. We have a PPI number tomorrow morning. We have the European Central Bank going to make their monetary decision, and we have retail sales on Friday. Right now, the market thinks the Fed can afford to sit still. I preferred with the hot number. It's not super hot, but it was hotter than the market thought, that they should still go the quarter point now. What are they waiting for by waiting for November? I'm not convinced that that's it, but I know what they're saying. They're saying, hey, we're going to go one of these times. That's what the market thinks the Fed is saying. And why not give it another month and see what happens? We know that gasoline prices are driving things up, but the core number doesn't look at that. Okay. When I look at Apple, getting pretty much what I thought, the market now towards the low of the week, down 2.25%. What if I tell you China today came out with a statement through their spokespeople and said they never said that government officers and people that work in government and state-owned companies can't use their Apple phone? I swear to you, this happened today. Every news service that I know of, both American, Western ones, and Chinese, all covered the story the same way originally. But here comes, no, that's not what happened. All right. Market didn't buy it. You are down today another $2 in the stock. As you look at the trend, you are down. In order to negate it, you got to get back over the 180.24. The Bollinger Band comes in at 170.61, and momentum is down but oversold. If it weren't this oversold, I'd say I really think you're going here. I give it a 50-50 shot right now because it's oversold, but the chart is ugly as can be. Rivian, is the market going to hold on to an embedded reading or not? It's got it, but it closed right at the low. When that happens, unless you're up sharply, typically the next day, you lose the embedded reading, which could call for a break here. Remember, tomorrow's when the UAW decides is it striking. As I see it, it's a fait accompli. They're nowhere near, I don't know, one of the auto dealer manufacturers, rather, that have come up to the table and offered anything even approaching a 25 or 30%. I don't think they can go that high, but according to Mr. Fine, they can go that high. I saw his interview today. He wants to milk them for everything they're worth. He may be milking his own members before it's all said and done. UGA overbought, running the upper Bollinger Band. It either embeds or you get a correction from that. So I'd be a bit cautious right here. XLF, the financial services, you've run into the brick wall at the upper Bollinger Band. So the trend's up, you're overbought. I think the pros came out yesterday against that number, and I think they banked the profits and they sit back. It either embeds or corrects a bit. In the industrial sector, this is a spot to cover all shorts, a flip-flop. But it's the first challenge of the 100-day average in the Bollinger Band. Now, before I go too far, I want to remind you, with everything that I think should happen, I'm praying that Xfinity gets the internet connected. We will have the live webinar tomorrow. Invites have been sent out. You won't be getting one if you weren't on my list. If you didn't get it already, move your cursor up here. You'll see an icon. Give it a click. Fill out the form. Away you go. I do not record these webinars to put on the website, so you either attend it or you don't. We have only a few seats left. I thought we'd fill, and we're about there. So looking at it, okay, that's about where I thought you'd cover. Disney, all right, market stuck at the 18-day average, so you had a bear market rally. For those of you that have taken my course, you know that when you lose an embedded reading, which happened right here, you often go to the closest main moving average, which is exactly what occurred, and now the game's got to rebuild itself. In RSP, again, I appreciate being told and taught that this is better than, I think it was the RSPD, and I agree. Trend is down. You're trying to carve into all the support levels of the 100-day, the 200, and the Bollinger Band, but the trend is down in the market. I think the pros will sell it at 148.15. Very tight stops over 148.58. And if the market keeps going down, they'll look for it into all those numbers. Still a problem there. The home builders. I'm looking at resistance at 80.99. You'd be wrong. I'd be wrong if you get back over the highs here, right in that 8,300 zone, and I still think you can get down here. You'll say why, and I'm going to say, listen, I think people are running out of cash. I see that mortgage applications were at since 1996 the lowest numbers. I realize what everybody's saying. Now, if you need a home, you're going to buy it. I buy into all that, but I do think the Fed has another interest rate hike in it if these numbers come in hot. We will see. I'm in the minority on that, and I admit that. You have the embedded reading makeup taking place in energy, but it looks to me like it wants to correct a little bit. I'd be a little cautious here. Pullback would be healthy for the market, especially on a pullback if the red and the blue lines stay under 80. I'll be looking at this hard in the morning, trying to tell my subscribers what I'm thinking. In the gold market, again, the dollar's really not losing ground here, and the threat is that there'll be another hike. So the dollar wins by default, maybe. What do I mean by that? What's the European Central Bank going to do in the morning? Are they going up a quarter point? They're going to hold tight. Why is that important? Because 40% of the dollar index is made up of the euro. So what it does will affect the gold. At this point in time, I'm in the bear camp, but I'm also looking at a very oversold market. I would not be deploying new money on the short side. In SLV, same thing. Oversold, coming down rather hard. Copper, all right, this is where the market should fail. Now, Country Garden has another vote coming up right now for the last group of people, but everybody's given them 3 years. Why wouldn't that? On the other hand, I haven't seen China do anything to help the property market, infrastructure, or the like. I see a trend that is down until you get back up and over 88.09, and it looks to me like the market's got a target of 35.88 if it wants to head lower on this. In TLT, well, you should get stuck here because people don't know what to do with this or BND, given that the market has made up its mind the Fed isn't going to do anything. You negate the whole downtrend if you get back over 94.90. Market is down, but would I tell a trader to deploy new cash in an oversold market? Not going to happen. I think the pros are out. In the dollar index, still bullish. If the market gets a close under 79, you open the door to get back to 29.02. Until that happens, as I told you, I think the pros are buying, which I think they even did today, and they'll look for the upper Bollinger Band at 29.44. From here, it's only looking for another, if you think about it, 18 cents. It's pretty hard to tell you to go into the market at this point. FXE, does Miss Lagarde go with the hike or not? That's what it's about. I think if you get under the 98.89 level, you open the door to go to the lower Bollinger Band. And if you get back over 98, let's see, what would that be? That would be 99.91. Then you open the door for the 18-day average. Why take a gamble on what you'll do or not do? So again, move your cursor to the top up here, give it a click, and away you go. I'm Ira. I'll see you all, I hope, at 12:15 p.m. Central Time tomorrow in the live webinar. It should be a lot of fun. Take care.